Now, I just made a YouTube video um, on a what is that? Um, Funding Pips trading account, trading challenge, and it has come to light of the systematic manner in which I need to perform the trade. And this I have discussed in the past as well, but it has not been solidified yet. And so what I need to do is back up this new understanding in trading in order to essentially be consistent. So let's see here. Okay, so I'm back here. Let's take a look at it. All right, so now there's no borders. Okay, now what I've considered the most important part is when I'm considering a trade, sequence of events for a trade. Okay, so here's the considerations that I need to make. Okay, considerations that I need to make. Okay, the first part is what is the most important part about any trade? It's news. News, okay? Or catalyst. Okay? That's going to impact it, and that's going to cause a very, very interesting thing to occur, which is essentially a parabolic move. Okay? That's where parabolic moves occur. Okay, it can be up or down, but essentially that's what happens. Uh, it's a parabolic move that launches the forex pair from where it currently is to a new level, which is going to be either up or it's going to be down. That's how it works. That's the first step. First step in trade consideration is that. Okay, that's what I need to consider. That's the first step. That is the first step. Okay, that's why proprietary firms uh, have these news events that are categorized and listed for traders to review before making the trade or to stay away from that area. Okay, so as a prop firm trader now, there is a second element to this. There's a second element, which is essentially, which I've already ran into multiple times. Okay, I've ran into this in multiple times. This is essentially an area of timeline, time of time of region and time of region and market closure. Okay, that can have a dramatic impact on how I trade. So in the forex market, between the hours of so essentially between the hours of so essentially 3 p.m. 3 p.m. is the cutoff point here. Okay, 3 p.m. 3 p.m. is the point where uh, trades will stop and large spread will occur. Okay, that is an area that I need to be aware of, stay clear of within a certain amount of time period. Now the market opens on funding pips at about 4:30 p.m. At about 4:30 p.m. Okay. Now this is an area where the fresh uh, candle painting occurs. Okay, right there, and spread uh, merges back to one. Okay, that's an area that I need to be aware of. These are the things that I need to consider. These are the first steps of understanding before I consider anything else. Okay, and this needs to be clearly and crystal clear understood in order to make the right trades. Okay, that's what happens. Now at about 12 o'clock, 12 p.m. This is all Mountain Standard Time. Okay, so this is all Mountain Standard Time. At about 12 p.m., European market opens. Okay, shifting from the Asian market. Okay, and when that happens, a dramatic movement occurs based on the buildup of news that occurred. Can move big based on the news buildup from Europe. Okay, that's what happens. Now, at about 6:30 in the morning, 6:30 a.m., futures move dramatically based on buildup of U.S. market. Okay, and at 7:30, the full impact of the U.S. market open will be realized throughout the trading day. Very, very volatile, most volatile period of the market. For the futures, and may not be for the Forex pair. Okay, that's how it works. Okay, that's the consideration that I need to make. These are the things that I need to check off when I make the trade. Okay, and so the whole different type of trading can occur. One of them is the parabolic move. The other is the normal ranging type, whether it's going to be a trading range or it can be a otherwise it's going to be in a trending mode. And based on what I've heard from Al Brooks is that statistically speaking, 80 to 90% of the time, the Forex pair will range within a trading range about 80-90% of the time. And about 10% of the time, it will spend in a moving from one trading range to another trading range. That's how it works. And that's how the market works. That's the reality of the situation. And that's reasonably how trading occurs. That's a fact, statistical fact. Okay. So that will essentially define the first steps to consider anytime I'm making a trade. Okay. One other side note that I need to consider is the trade moving into direction within the time frame that I've set for myself. Okay, because the longer I hold in a certain period, it means that there is essentially it is essentially negating. It is essentially chipping away of the strong thesis that I had that made me enter into the trade. Okay. So the longer I hold and the longer it moves sideways, it means that my thesis needs to be readjusted prior to continuing on that current path of that thesis. So there is a time period that I need to consider as well. Okay, that's one other consideration. Okay. Now the second part, and the second step is to consider there's a thing called market structure. Market structure is something that I've heard before, but market structure, but I have not concretely established a clear understanding of how that plays out. Okay, so I need to expand on that market structure. Okay, now I guess the third step is essentially the third step is essentially looking at the support and resistance. A very, very powerful. It is a very powerful. It is a very, very powerful directional component of candle formation. Okay, that's how that works. Now the market structure is essentially saying, okay, so how does the market structure? Oh, okay, that's what it means. Okay. So the market structure is essentially defining what the left side is painting. What is the left side of the candle formation painting? Okay. So what is the left side of the candle formation painting? Okay. So that means market structure is saying that okay, is a moving average showing a downtrend or uptrend? Okay. Uptrend or downtrend? Okay, that's how it works. Moving average, that defines it. Also, I suppose support and resistance can be placed. Okay, that can be considered in the category of support and resistance. As far as the gap between one region of support and resistance, what is the distance? What is the number of pips, amount of pips between those two regions? Okay, that I need to consider. So the market consideration is now. So what has the previous version of? It is essentially defining a trend, essentially. Yeah, that's essentially pointing a trend, possible trend. Based on how the candle is painted. Okay? All right. Okay, so the next part is the fourth step. The fourth step is looking at the size of candles and formation of also candle formations. Okay? Candle size, candle formation. Okay, so save that. All right. So I may have to expand upon this to get a better picture of the scope of how to make the trade. Okay. The fifth step is to let's see. The fifth step is to determine the size. and also determine the size of and also determine the size of add. Okay, that's what I need to determine. Okay, which is essentially the fifth step is going to define risk size. Okay, risk size. That's what I need to do. What am I? How much I'm going to risk? Okay. This step 4 is essentially defining what a setup is. That's what the setup is. Trade setup, right there. That's trade setup. Candle size, candle formations. Whether it's going to be a wedge, front or back side, or a wedge, front or back side, or so that defines whether it's going to be a front or the back side based on whether it's going to be a higher high. Okay, that's how that works. Or lower low. Okay, that's what I need to do. Candle size. Are the candles becoming smaller or bigger? Or are the candles mixed between green and red? Okay, that's the trade setup. Now the risk size is going to be based on the practice and empirical data to survive, actually to thrive in trading, in obtaining the best return on my trade. Okay, adding. So I have to define how much am I going to add, and is that practical? Okay, that's it. Now the sixth step. Okay, these are the things that I need to carefully consider when I'm making these trades. Okay. Now, I've established the support and resistance areas where possibly the trade can take a dramatic turn on step 3. Then, after I've analyzed all this, actually, I need to consider the stop loss at this point right here. Okay, stop loss right there. I need to make sure I have a clear area, clear place where I will say that my trade is no longer valid and exit and look for another trade. Okay, that's it. Simple as that. You just set it and forget about it. Okay, let it do its thing. Okay, so that's where the stop loss is. Now finally, step 7. make the trade. Okay, that's how it works. Okay, make the trade. That's where the trade occurs. Okay, that's where the trade occurs. And I've already thought about where I'm going to add, when I'm going to add, based on what information. And stop loss is automatically taken care of, and it's done. Okay, it's done, over with, and the trade completes on the 7th step. Okay, God rested on the 7th day. Okay, this is the 7th step. That's where the trade concludes. Make the trade. It goes. It's set. And then the 8th step would be to add or manage my trade. Manage my trade. Okay, so this is where management occurs. Okay, so the option is to prematurely exit the trade. That's one. Or add to the trade. Okay. Now that can be a whole different area that I need to consider when I'm adding the trade, and that can branch off into another tree right here. Okay, premature exit based on, now that is going to be based on whether the trade is has established, it is establishing a area of reversal. That's the only reason that I would exit. Actually, two reasons. One of them is taking too much time. That's one. Okay. The second part is reversal. Okay. The third part I need to consider is, what is a continuation? How do I distinguish between a pullback? Need to consider. Need to consider between a pullback and a real reversal. Okay. So I need to make sure I understand how that works. Okay. All right. Taking too much time. If the trade takes too much time, then I need to exit the trade, because it is essentially painting. It is creating an environment where a doji is being created. Okay. So now adding, I've already established the trade size. Okay. I've already established trade size, and all I have to do is implement that trade size. And also, okay, so that's what I need to do. Add just once or add a bit more. Okay. Now here's the part where it is, here's the part where adding has been a very, very tricky situation. Okay. So if I were to create a little picture of what happens is, now when I look at this situation and when I look at it, okay, so let's say the trade goes like this, okay, and then I make this trade right here, or add right there, and then it goes up, and I add right there, and all of a sudden it goes up a little bit, and then boom, right there. That is a very, very difficult thing to adjust to, okay? Now, considering what I'm looking at here, this adding can cause a dramatic shift in the account. Okay, that's something that I need to consider, which means that I have to have a rule. Okay, I have to have a rule that says the break-even point has to be always kept Okay, so what I'm attempting to do now is to essentially set up a break-even point where my trade is not going as planned. And so that is something that I need to set in stone what happens. Okay, so if I look here, now, so what I have to do is set up a situation where right here, I say to myself, this is the new position of a stop loss right there. Because what I'm saying is that this had gained enough such that if this goes up to this point and drops to this point, that means that essentially I'm slightly positive and willing to accept the drawdown and then exit the trade because it has essentially, the trade essentially made itself reverse, counter to my thesis. Okay, so that is something that I need to consider as well. Okay, and that essentially rounds up the finer details of step-by-step process of making the trade. Okay, so step 9 is essentially done with the trade. That's the end of the trade. Okay, this is marking up the right here. Okay, so step 1. Okay, I suppose what I need to do is set up the something called step 0. Okay, zeroth step. Start. Okay, right there. Start of trade. Okay, that's how it works. First step is to understand the catalyst. What is that? And the parabolic move. Trading the parabolic is so parabolic is the second part of trading methods. It's a totally different ways of trade the parabolic because it essentially is looking at now that is, this in itself is, a totally different means of trading. Okay, so I need to figure out how to trade that as well. Okay, so that's something that I need to look at in section 10 of the parabolic trade. How do you trade the parabolic moves? I see it, the news event occurs, there's a time that it has been established, and it moves in a specific manner. The difficult part is the candle that is generated within a 1 minute period varies in its length. And so the right entry, and it can just whipsaw right back, and the trade can be null and void with a severe handicap to the capital. Okay, so that's something that is a very lucrative situation because it happens quite often. Uh, just like today, it happened twice. Okay, before the market opened and after the market opened at about when the FOMC disclosed certain information that was impacting in a parabolic manner. Okay, that's what I need to, that's the second part. And the first part is, the first part of essentially looking at the market is it a news driven event or is it just post news event? Okay, so so there's two criteria. The first part is when a catalyst has been injected into the market that causes a dramatic shift in the price of the forex from one position to the other as it transitions from that point. Then a moment later, a regular routine of its dissemination into the market occurs that is being absorbed to stabilize the new catalyst that occurred. So that's the second part. And then there will be the third part, which is the news had been digested by the market. And when that happens, it just essentially moves in a sideways manner. Okay, that's how that works.